With the mortgage calculator. Today we're going to go through some live mortgage rates and then we're going to do a deep dive into non-QM loans for self-employed borrowers, some of our favorite stuff here at the mortgage calculator. We'll wait just a minute to get started here. We're going live on all the different platforms because we do stream this live on YouTube, Facebook, Instagram, LinkedIn, and Spotify, Apple Music as well. So give us just a second here to go live on all the different platforms and we will get it started. We put the chat up on the screen, so feel free to drop some comments in there. I see some comments already coming in. Appreciate it. Appreciate everybody tuning in nice and early. And we'll get started here in just a moment. Hope everybody's having a great week. So with that being said, it looks like we're live on all the different platforms now, so we can go ahead and get started. We'll take the chat off the screen for now, but please keep dropping questions there in the chat. Drop some comments, questions if you have them, and we'll get it started here. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every weekday on the show is go through some live mortgage rates to check out what the market is looking like. And then we do a deep dive into a different loan topic. Today's topic is going to be non-QM loans for self-employed borrowers. This is what we specialize on here at the Mortgage Calculator. So our sales manager, Jose, with 28 years of experience, is going to go through some different options that we can present for self-employed borrowers using our amazing non-QM loans. With that being said, before we do that, we'll go ahead and look at some live rates. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the interest rates are looking like this morning.
All right, let me switch my screen and we'll check it out. And here is our pricing tool. This will show us the general rates and the APR for today, January 10th, just after 11 a.m. Eastern. So all of our standard programs are live here. So we'll set up a basic scenario and compare it across the programs. If you'd like a full loan estimate that breaks down all the itemized fees, please get with one of our licensed loan officers. We have over 200 licensed loan officers in 23 states. So for the demo, we'll set up a standard loan amount here of $400,000 to compare. We'll set the LTV to 80% loan, 20% down payment. And we'll ask the computer to find the lowest rates we can offer for conforming conventional. And we'll compare that to FHA, which is usually the second best option for most borrowers. And then we'll go into our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs, including the topic for today. We also have VA and USDA. VA is only for eligible vets and active service members. If you are, just let us know. USDA is only for eligible properties. If you do happen to be looking in one of those areas, just let us know. We can quote either, no problem. We'll start with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. For all the demos, we'll use an estimated credit score here of 760 and an estimated debt-to-income ratio here of 40. So with these settings, let's check the conventional. About the same as it was here, 6.125 rate, 2.125 discount points and costs. That's the final APR at 6.379. So good options here for our customers that qualify for conventional, and definitely a lot lower than it was just the last few months. Now, if for any reason our customer doesn't qualify for conventional, typically the next option we always want to look at, set up the same scenario, is an FHA option. So FHA allows a little more leniency on credit issues as well as a higher debt-to-income ratio. But for the demo, we'll keep everything exactly the same so we can compare apples to apples here. So let's check out the FHA options. And just like yesterday, just a touch lower than conventional here, 5.375 rate, 2.5 discount points and cost, puts that final APR 6.311. So just a touch under conventional. So if our customers qualify for both, definitely check both out. And our customers that must use the FHA programs, this APR does include the upfront and yearly mortgage insurance. So definitely a good option here, almost identical to conventional. Now, where we love to specialize, as Kyle mentioned, is if our customer unfortunately doesn't qualify for either conventional or FHA. Many other banks or lenders will have to deny that customer, but but that's where we love to present our 5,000 additional options, specifically great options for self-employed borrowers, our topic for today, under our non-QM program. So everything else will stay the same here, but when we select expanded guidelines, also known as non-QM, we have a bunch of new options pop up here for income type. So full doc is what we use for FHA and conventional. That's 2 years of tax returns. So we'll typically choose a non-QM option to take advantage of one of these alternatives. We have asset-related programs, business bank statement programs, the investor Dscr programs. We'll pull those up in a minute for investment properties. Personal bank statement 12-month is the most popular. That's what we'll choose for the demo. We also have RSU, stated income, VOE, 1099, P&L, no income CDFI, all kinds of different options here. The most popular is our bank statement 12-month option, and that's for our self-employed borrowers, also our topic for today. Many times our self-employed borrowers, when they submit 2 years of tax returns, may have various write-offs and may not qualify at all, or just may need a little bit of extra income to get that home they really want. Either way, we can solve the problem with this program. No tax returns at all, just 12 bank statements to determine a debt-to-income ratio, just using the cash in the bank. So most of our self-employed borrowers qualify for much more income using these methods. So let's check the bank statement options this morning. All right. Best option here at the top, 7.25 rate, 2.125 discount points and costs. Puts the final APR 7.638. So it's about a little more than a point higher than conventional and FHA. That's pretty typical here. That's to use alternative income. So very comparable there, just about a point higher. Most of our customers that need to use these programs definitely can find some great options. And if we scroll down here, there's hundreds of variations. Some of these at slightly higher rates and costs may allow bankruptcies or foreclosures or other credit issues that would otherwise cause our customer to not qualify. And some may use different ways to calculate the income. Hopefully that's something Jose will be able to go into when we go into our deep dive example, where Jose breaks down some of these specialty options here out of the hundreds of variations. And before we get into that, we always want to do some live rates for investment properties. So seasoned investors, first-time investors, we have some great options. We'll set up the same scenario, 400,000 loan amount, 80% loan to value, 20% down payment. And we'll have the computer find the lowest rate options we can offer for conforming conventional, and we'll compare that to expanded guidelines, also known as non-QM. Government programs, FHA, VA, USDA do not work for investments. So we'll just have these two examples here. We'll start with conforming conventional. Everything's going to stay the same as all our other demos. The only thing we've changed here is the occupancy to investment property. So let's check out the conventional option. 6.99 rate, 3.25 discount points and costs, for a final APR of 7.382. So good option here for conventional. Definitely was not very feasible a few months ago when rates were very volatile. Now these are some good options for our customers that qualify. But I always recommend our MLOs and our customers check out our non-QM options as well. So for the final demo here, we'll set up the same scenario. And we'll do our expanded guidelines, also known as non-QM. And the first thing we need to select is our income type. So the most popular income type for an investment property and our most popular loan is the Dscr option. Doesn't require any income or employment or documentation on that from our borrower. Simply use the estimated rental income from the appraisal to determine a Dscr value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, aka the property cash flows, that's a ratio of 1 or higher. We also have options for ratios under 1. But to show all the best programs, we'll put 1.5 here for the demo, so all the best programs pop up. And finally, a prepayment penalty must be selected. 3 years is standard. That's what we'll use for the demo. We can select no prepay. That will cost more and limit the programs. We can also select 5 years, which does limit the programs, but does save our customer some money if they hold the property. 3 years is standard. That's what we'll use for the demo here. So let's check out some Dscr options. 7% rate here, 3.25 discount points of cost, puts the final APR at 7.499. So almost identical to conventional. I'd say most investors will take this option over conventional. Pretty much 100% of investors when it's almost identical in cost. If it's a little higher cost, it may be a little less than 100%, but I definitely recommend all our investors check these programs out there. When it's just about 0.2 higher, 0.1 higher, it is a no-brainer. You can do multiple loans, no income, no employment, 1, 2, 5, 10 loans at a time to refinance multiple properties, purchase multiple properties. So tons of flexibility here. Definitely recommend all our investors check it out. And if we scroll down, some of these options at higher rates and costs may allow bankruptcies, foreclosures, other credit issues, may allow us to use different calculations for income, such as short-term rental income, very popular request. We're doing an episode later this week on that. So tons of different options here under Dscr. And let me now switch my screen. We'll get into today's topic, which is going to be our non-QM loans for self-employed borrowers. So you always see me do the live demo where we do the bank statement example, which is the most popular example for self-employed borrowers specifically. We also have a lot of other non-QM options you see there on the list. Some of them are only for self-employed. Some of them are for any of our borrowers. But most of the non-QM options specialize to assist our self-employed borrowers specifically because, as I mentioned on the live pricer every day, those are typically our borrowers that have various write-offs and have complicated tax returns and complicated situations, right? So many times they are very qualified mortgage borrowers, but they just need a little bit of a different structure to put that together. And that's really what non-QM affords us. So as I do the live demo every day, you see me choose the best bank statement, but there's obviously hundreds of options. And then beyond bank statement, there's the P&L, the 1099, all the different variations. So Jose can go into some examples here. Tons of different tools. As I mentioned, there's over 5,000 different loan programs, aka tools, in our toolbox for our specifically self-employed borrowers or any other challenged borrowers that may need a little extra help, don't quite qualify for those conventional FHA programs. So, Jose, if you're ready, I don't know what tricks you got up your sleeve, but let's go ahead and check out some self-employed options.
All right. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. So self-employed borrowers go hand in hand with investors. I would say at least half of our investors are probably self-employed, maybe even more. Many of them are just employed as investors, right? That is their business. They own multiple properties, and we have various ways to approve that borrower. Just because they're self-employed does not mean that they are not able to go full doc in the traditional sense of the word of the full doc loan using tax returns. In this case, when they're self-employed, we're going to use tax returns to review their income and qualify the borrower. It could be either a 1-year tax return program or a 2-year tax return program. The 2-year option will give you slightly better pricing than the 1-year option, but you are exposing yourself to then having to average out the last 2 years, and depending what the scenario was in the prior year, that could really bring your income down. So let me go ahead and share my options with you. All right. So our first option is, like I was mentioning, full doc. So I wanted to put this into context for all of you so you could compare what the differences are going to be. Usually the difference besides the rate may be LTV in some cases, right? So here we're going primary full doc, 90% LTV, right, for our self-employed borrower. And we're looking at 9.5% as our lowest cost option and 8.75% lowest rate option. And here, when we're talking about full doc, we're looking at tax returns, because bank statement and P&L options that I'm going to show you are full doc option, just using a different way to calculate the income. So our second example here is our bank statement option. Let me make this a little bit bigger. All right. It's the most popular non-QM loan option right now, bank statements. And this is at a 90% LTV as well. And you'll note the rate does go up a little bit to 9.875 as our lowest cost option, and 9% lowest rate option to go bank statement. So in this case here, our lowest rate option was 8.75 and 9.5 on the full doc. So we're looking at roughly, well, not roughly, exactly 0.375 of a percent higher in the rate at the top end there. So now we have our profit and loss. Now, the bank statement option is will use either 12 or 24 months of income. And the issues that we could have with the bank statement loans would be declining deposit trends or large deposits that cannot be documented, because when on the bank statement loans, whenever we have a large deposit equal to 50% or more than the monthly income, then those deposits need to be sourced. You need to prove that they are work-related deposit that can be added to income, and not something like a loan or some unrelated credit that is not income. So when you do have issues with large deposits that can't be documented, declining deposit trends, or many months where maybe you ended in a negative balance or something like that, the profit and loss loan option is one workaround for that. Now, be aware that some P&L loans do require the last 2 or 3 months business bank statements to document the P&L. So make sure that if you're having issues with the last 3 months bank statements, that you don't choose a P&L option that is going to require that. So this case right here, we see the P&L option is slightly higher rate. Bank statement was 9.875, almost at par. P&L option is 10.375. So we go about a 0.5% higher for the profit and loss, since we are not documenting the full 12 months of cash flow. There is a little bit higher risk, and we can buy that down to 8.625% interest rate. So now let me show you some self-employed investment options for these same loan products. The bank statement option does drop to 85% LTV as our best case option for bank statements when going investment. Here we're at 9.5% is our lowest cost option, and 7.625 is our lowest rate option. And now we have our P&L. Our last option here would be for investment P&L. And please note that you can still do 85% LTV at this P&L option for investment. 9.875 is our lowest cost option, and 8.999% is our lowest rate option. And just to know, I don't have any refi examples for you today, but typically the refis will be 5% lower LTV than the purchase option when you're doing a cash out refi. Rate and terms will have the same same LTV.
All right. I don't see any questions here. No questions. We got an Olaf from Mexico. Okay. All right. Well, we can go ahead and wrap it up then. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. So we'll be back tomorrow with a new topic. We appreciate everyone tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.